Welcome to today's panel. We'll wait for people to continue joining the webinar, and then we'll start in the next 2 minutes. Welcome, Sharon. Welcome, Sarah. Welcome, Yusuf Kasidi, Finuela. Thank you for joining today's webinar. And as usual, we are waiting for people to continue joining our webinar today. And as you wait for the next 2 minutes, we can just quickly drop in the chat which country you come from, chat a little bit. Welcome, Yusuf. And we hope to have an interactive session as yesterday. Welcome. We have 1 more minute to start. Yusuf from Ghana, Paul from Sierra Leone, welcome. Sarah from South Sudan, welcome. Ezekiel from Ghana, Innocent from Malawi. You're all welcome to today's webinar. Welcome, Sisi. Welcome, Lisa. Amadu, good to see you today. Okay, we are at the top of, we are 2 minutes past the hour, so we can start our webinar. Welcome, Sharon from Zambia and Francis from Uganda. We'll start our webinar today. So I would like to welcome you all to the second webinar of the week. This is part 2 of week 4. And today we're going to discuss about introduction to financial management. I will introduce myself. My name is Joyce Chikuku, and I'm the East Africa Regional Coordinator for the World's Mountain Initiative. And today we also have our able presenter. Her name is Professor Elizabeth Kalunda, who is a distinguished scholar and an influential figure in the fields of finance, accounting, and education. Elizabeth has a PhD in business administration and specialized in banking from the esteemed University of Nairobi, and has solidified her position as a leading expert in financial matters. Her education journey also includes an MBA in accounting from Moi University and a Bachelor of Education in Family Consumer Sciences, Home Economics, and teacher education. She has over 6 years of experience in applied business research consultancy, and Professor Kalunda work is dedicated to financial inclusion, women economic empowerment, corporate social responsibility, and farm risk performance. Welcome, Professor Kalunda, and take it over.
Yeah, thank you so much, Joyce, for that very lovely introduction. And also thank you, delegates. I can see from your charts, you are from all over Africa. Karibuni sana. In Kiswahili, karibuni means welcome. So it's my pleasure to be taking you through this session on just basic financial management skills. And these are very important skills. As basic as they are, you really need to understand the building blocks of any aspect. So from the brief I was given about your profiles, most of you are either in the NGO sector, a number of you are doctors or doctors to be, and you have an interest in starting your own business. So whatever we'll be sharing today will actually help you run your business successfully. And if I can just recall, yesterday I had a session, I don't know whether it was all of you who were there, but I brought to your attention that 90% of business startups fail. And yesterday we said that we learned quite a number of things, but today we want to push that conversation, and we are looking at financial management practices, and these are the basics that any person who runs a business, irrespective of whether you are an accountant or whether you have a finance background, you must possess. So let me share my screen so that I can guide the discussion. And as we had mentioned yesterday, as I do my presentation, if you feel that you have a question that is pressing, you are free to ask. You don't have to wait until the session is over. You are free to chat either in the chat or the QA box, and I'll respond to your questions. So as I'd mentioned, the topic for today is on managing business finances. So by implication, it means that businesses will have finances. So we just want to get some very basic knowledge that is very fundamental in ensuring that you have managed your business finances for the success of your business. So in terms of the objectives for today, I'm hoping that by the time the 1 hour is gone, you'll be able to understand the significance of financial management for businesses. You'll be able to learn the key financial challenges that are unique to small businesses and startups. And then you'll be able to comprehend fundamental financial principles and tools for managing finances effectively. So in terms of my presentation outline, we'll have the introduction, financial management, financial planning. We look at expense control and cost management, financial records for financial planning, and then we wrap up with with very basic and fundamental tools for managing finances effectively. Now, if I can just go back on the learning objectives, I would really appreciate when we are done, you can actually tell me the second bullet, where is to learn key financial challenges unique to small businesses and startups. Since I was told that most of you could be having businesses or you are about to start your business, I would want you, as we proceed, you can just chat some of the challenges that you find are unique to small businesses, so that we can be able to see whether whatever we are learning today, does it address those challenges. So kindly just feel free to chat any of the challenges that you see small businesses encountering, and by chatting them, and also just by identifying them, it actually gives you an alert that the business that you want to start should not actually encounter those challenges, because we'll be having at least practical solutions to those challenges. So kindly feel free to chat that. So maybe just for a start, I assume you are the lady that is there and you want to start a business of whatever nature. Could it be a hospital? Could it be a restaurant? Could it be just a service firm? So the question that you will ask yourself first is, how much money will you need? Now, this is a question that probably you cannot get the answer immediately, but it is something that you need to really internalize, get a pen and paper, and then get to know how much you will need. Otherwise, if you don't do that, you can start the business and then you find that you are short of finances and you've already put in some money in it. So those will be just there'll be sunk costs that you cannot recover. So it is very important to just ask yourself, for any business that I want to start, how much money will I need? And then the next question that that will bother you is, how will you manage the finances? Now, let's say you've done your calculations, your business will need 200,000 Kenya shillings. You can convert that into dollars. So the question will be, so how will you, once you get that money, supposing you get your savings, how will you manage these finances? Now, the problem will be, if you don't have a plan on how to manage those finances, you'll actually end up misusing them or focusing on items that are not priority. So this is a question that you really need to ask yourself, so that as you do your business, you know what to do. Now, supposing you find that whatever you need is more than what you have. So the question will be, where will you borrow the money? So there are various sources that you can use. But remember, for a startup, it's going to be a bit difficult to borrow from the formal sector, unless maybe you have, there's a program that is helping startups. Others, if you go to the conventional lenders, who are the banks, they will actually need a lot of information. And at the end of the day, maybe they might not be comfortable lending to your business, but they'll be comfortable lending to you. So it means that it is your financial standing that will allow them to finance you. So if you have a salary, they will look at your salary and then now they see how much can they lend. So essentially that will mean that you have gotten the loan as an individual, but you as now the owner of the business, you will now lend the business the money. So you can see the money is not lent directly to the business, but it is lent to you as an individual. If you have good friends, they are going to lend you money. I know those are rare situations. If you have a family that has some savings, you can have that. If you have your savings, again, that can also be part of where the money will come from. And then another very critical question will be, supposing your expenses are more than your revenues, what will happen? That actually means that you'll be operating at a loss. But it is important to note that the desire of most businesses, actually, let me say all, is to have more revenues than expenses. But at times you might find that that is not the case, especially for businesses that are starting up. So if you have a startup, you might find that the initial maybe months or even the initial year, depending on the nature of the startup, your expenses will be more than the revenues. And you need strategies to know how you're going to reverse that so that you have more revenues than the expenses. And then another very critical question, how many employees will you need? Now, depending on the size of the business, depending on the different specialities that will be needed to run your business, then you'll have different needs for the employees. So these are some of the key questions that will actually be, that will be running into your mind when you want to start your business. Now, before I move to the next slide, I want to just look at the challenges that you've mentioned. So I can see from Cloud, one challenge is to overcome competition. Very good. So that means that if you start a business, chances of you being the only one offering that service or that product are very rare. So there will always be competition. So you need to see how do you make your farm become better than the other so you have that competitive advantage. You have mentioned shortage of capital, a very common problem. And you've also talked about getting sponsorship. Again, very difficult to get that, but it is possible. Again, I can see inadequate capital has been repeated. There's the issue of lack of proper record keeping. That is also very important, and it is part of financial management. And we are going to go through that in today's session. I can see Helen has written failure of customer to pay in time for goods taken on credit. Now that gives you an alert as when you sell goods on credit, your intention is definitely to increase your sales. And it will be so unfortunate that you are increasing your sales, and yet those people you have sold to have actually no intention to pay. That simply means that you opened the business to give donations of goods or services. So to avoid that, you need to have a method or a policy that will guide on who you should give credit. So don't listen to everybody when they come to tell you, please give us goods on credit, we are going to pay. No. You must have a relationship, you must have a credit scoring metrics that will guide you to know who qualifies for credit or not. So thank you for posting your answers. At least now it shows we are on the same page when it comes to look at how we can manage our finances. Now I want you to read this and actually internalize it. I'm sure you've seen the lady there. This is Oprah Winfrey, but there's something that has been quoted that is not hers, but it comes from Ivan. So I really like this, and it's quite thought-provoking. So the caption there is, the reason I've been able to be so financially successful is that my focus has never, ever for 1 minute been money. Now that's interesting. You can imagine for most of us when we start our business, our main focus is money. Our main focus is profitability. So then that means that there's a mismatch between focuses when we start business. And for me, I totally agree with what Winfrey what is quoted there coming from Oprah Winfrey's program. Now, when you start a business, your focus should not be making profit. but your focus should be offering services or goods that are needed by consumers. It should be filling a gap that is in the consumer or a gap that is in the market. If you are able to fill that gap and give customers what they need, then automatically the profits will just come flowing. But if your focus is on profits, you'll actually start it wrong, because for you to get profit, it will mean you have to sell goods at a higher price. If you overcharge, then there's an ethical issue there. Another thing would be, let me reduce my expenses. Now, if you reduce your expenses, that actually would lead to compromising the quality of whatever you are offering. So any business that you start, the businesses that you're intending to start, so let your focus not be profits, but be the delivery of services or goods that are needed by the consumers. So for me, I hope that by the time we are done, I mean, if there's anything that you should carry home, for me, this is very important. So let us look at the challenges that are there when it comes to businesses. We had, some of you had mentioned, so there's limitation in capital, there's uncertainty in cash flow. Remember, cash flow is just the money that comes in the business and goes out of the business. Now, for startups, you are not so sure of what is going to happen. And sometimes businesses can be seasonal. So what will happen will be, in the first years or the initial year, you'll not be able to know the pattern. So these things, you'll be learning them when you are in the business. So because of that, there'll be some uncertainties. Maybe if this month you got so much, you might think that next month I'm going to receive, the business is going to be very active. And then you find that is not the case. So it is only after a certain period of time that you'll be able to note the pattern. So that is something that is very prevalent in small businesses. And then now, if you are not certain about your cash flows, you might end up actually maybe planning for expenses that are more in a certain month, and yet that month you're going to be very low in business. So that means that the expenses are going to be more than the revenues, and you'll be operating on a deficit, or either in a deficit or in a loss mode. Another problem or another challenge that is unique to startups is high operational cost. Now, if you look at startups, some of them, because of their size, they are not able to enjoy economies of scale. And again, as a new business, you might not be able to negotiate good terms with your suppliers because you are new in the business. So you might end up finding that your operational costs are high. And again, besides that, as you do your business, as you start your business, now you'll be able to know the nitty-gritties, and then you know how to save on one or two things. So initially, you'll find that your operational costs are high. Another problem or challenge is limited access to funding. So I will not explain this further. I had explained the situation when you want to borrow finances from the banks, how it will be a bit difficult. And then maybe to answer a question there, Sharon is asking, is it okay to involve family in businesses? Maybe as a way to increase your capital base, you can decide to bring in family members. But the most important thing is that any family member that you're going to involve in the business should play a role. So one, if they're bringing in capital, let them bring the capital, and let there be a contract that clearly shows what what is their role, or what is their input, how much profits will they have in terms of the share, and also in case of exiting, what is the exit strategy. So that will be very important. Again, one thing that I just want to caution about involvement of family members in the business. Remember, one of the questions when we started was, who will you employ? Now, if you want to employ family members, they must be having the prerequisite skills. Don't start a business and say, I have a sister who maybe did not finish school well, or she just reached up to a certain level and could not proceed. And now that she's idle at home, let me give her some work in my business. You are actually planning for your downfall. So family members, be very cautious when you're dealing with them. Try as much as possible for it to be formal. And if it is giving roles, assign them roles that they can be able to do. Otherwise, it will be at the detriment of your business. Okay, so another thing that brings challenges to startups is market volatility. Now, by the term market volatility means that there'll be changes in the market that can, let me call them spikes. There'll be variations. Maybe you had planned in this season, you're going to sell a lot and then something happens. And I can take the situation in Kenya. Right now, we are having new tax policies. This has affected businesses. These policies had not been foreseen. So we can say that the market is very volatile, meaning it is so sensitive to changes and it is really changing in a manner that we are not able to predict. So again, for a new startup, the volatility will be there. You are new in the business. And sometimes if your business is new, and you have other big brothers, big boys in the business, they can decide to undercut your business, and you find that you are trying as much as you can to maybe follow all the things you've learned, but then customers are not coming your way. Probably they have been given better offers by your competitors because the competitors have been there. So that's a kind of volatility, that's a kind of disruption that your business is encountering. Another very key important problem is talent acquisition. And that's why I decided to pick the point that Sharon had put up in terms of don't bring in your relatives or family members if they don't have the prerequisite talent. Now, we all know that talent needs to be rewarded, and for you to attract good talent, then you must pay. Now, small businesses or startups sometimes don't have, I mean, in most cases, they are short of finances. So you might find that you don't have, you might want somebody who is qualified, but you cannot attract that person. And another problem, again, other than just talent acquisition, there's talent retention. If you're a small business, you'll actually be able to attract talent, you train them, and then meanwhile, they'll be looking for jobs, or your competitors who are bigger and old and mature in the business, they are going to poach them. So this problem is always there, either in acquiring or retaining them. So that is something that you should be very conversant with. And when you have talent that wants to leave, just let them go, let them grow. Don't feel very bitter that how comes I trained this person and they have gone. No, they are growing just the way you also grow. So, but note that that is something that is likely to happen. So to address that, you always need at the back of your mind to have some succession planning matrix at the back of your mind, so that you, if it's, let's say, for example, if it's you've started a hospital and you have a very good doctor, always know that this doctor can always leave. So at the back of your mind, just have some idea who can you take in case he leaves, and also have very clear contracts, so that if somebody is leaving, they don't just wake up one day and tell you, I'm not coming today to work, or I'll not come tomorrow. So to be able to ensure this continuity of business, see how you can navigate around the talent acquisition and retention problem. And then another unique challenge is lack of business history. Now, for a business to succeed, for you to convince people to bring in money, for you also to convince people to buy your products, especially if you are manufacturing, people need to have some trust. They'll ask you, who has been your customers? How long have you been in business? Now, for a startup, you have no history. And sometimes people like to wait before they can get involved. So if everybody is waiting, then that means there'll be nobody to actually to support your business. So these are some of the challenges that our startups have. And it is important that you are just conversant, you are alive to them. And when they happen, you have a way of addressing them. And I think as I was going through them, I was mentioning how you can handle them. And note that these are not issues to wish away, they'll be there. So by just noting them, you'll be able to handle them when they come. They'll not catch you by surprise. So let's look at financial management. Now, financial management is actually a very broad term. And loosely speaking, we can just say this is a way of trying to ensure that the finances that the business has are going to be used for the right purpose. And the right purpose is the purpose that you have put down in pen and paper as the plan on how you want to run your business. So it is quite a broad term, but it touches on finances. So when you talk about financial management, it is very, very important to note that this is the heart and soul of a startup's journey. If you don't manage your finances well, you've started without the heart and soul, or you are starting with a very weak soul. And as human beings, we know what is the role of the heart. It's the one that pumps blood in our bodies. So even for startups, just the concept of financial management, this is what makes the business either survive or not survive. Okay, so again, financial management, we can say this helps in laying a strong foundation and ensuring sustained growth. If you plan your finances, you'll be able to have a strong foundation. You'll be able to be in business for long, so it will bring in sustainability. Now, one reason why small businesses fail is that they do not manage their finances properly. And that's why this topic is very important for the success of your startups. Now, when you are dealing with financial management, you need to have a plan. And the plans that we have here, in relation to this, you need to have a financial plan. And a financial plan is part of the business plan. So I'm sure you've been taken through the documentation that you need when you're starting a business. The documents that you need is a business plan. In the business plan, there's a financial plan. So this is the plan that will show the projections of how the business is intending to grow, what market the business will have, what are the costs likely to be incurred, where are the finances coming from. So that financial plan, that mathematical pattern, where you have calculations that show this is what I'll be getting, this is what I'll be spending, and therefore this is what I'm expecting to have as profit. That is referred to as a financial plan. So it is a very critical component of the business plan. So when you start a business, the first thing that you will need is capital. Capital refers to the initial amounts that you pump into the business. Remember, a business cannot start without money. So the initial amounts that you say, I'm starting a business and I'm going to put in $1,000. That amount, irrespective of where it's coming from, that is what we call capital. Now, the capital, as I'd said, you can either borrow. If you are so lucky, you can get a loan. But before you get a loan, you must have put some money for yourself there. Or if you have borrowed a loan indirectly through you and then you lend to the business, then that means that will actually be your equity. It will be your contribution in the business, but for you, you are going to pay it back to the bank. For businesses that have been in existence, the businesses can actually get directly loans. So when we talk about capital can either come directly from the owner or it can come as a loan. So when it comes to capital, we say capital can either be equity, that is the owner's contribution, or it can be debt. These are amounts that you have borrowed and you must actually return them back. So we are saying when you start a business, that initial amount that you get, and especially the one that will belong to the business and you are not going to repay, that is the capital now in the strict sense. That amount must be planned well and it must be allocated wisely. So you can imagine if you have your $1,000 and you want to start a hospital, and when you get, once you get the amount, you start spending it on certain things, maybe a few equipment here and here, furniture here and there, and then you discover, one, you don't have maybe, you cannot be able to afford rent, and yet you have bought certain things that need to be put in a building. Or you see that you need something else, and yet you don't have the money. So that's why we are saying when you start a business, you need to allocate the initial capital wisely. Get a pen and paper. Put down what do you need. So these are the initial expenses, things like licensing. If you do everything, you have everything, and then you don't have the licenses, there's no way your business can be allowed to operate. So ensure that you have all those ready and you have done the computations and you see that actually you have all that is needed. And then now we are saying that proper financial management is what will ensure that your capital is divided among essentials like equipment, inventory, rent, and marketing. So note that this is very important. Now let me talk about marketing. Now, when you start a business, you will definitely need to let your potential customers know that you have a business. So for some businesses, depending on your side, on the size, you can actually have a launch, just a business launch where you invite people for a cup, maybe for high tea, or you can invite them for dinner or for prayers. That way you invite potential clients and then you tell them that you want to start your business. Others, you can just decide to have maybe flyers printed about your business, showing the location and all that. So you need to incur some marketing. But the beauty with that these days is that you can do marketing cheaply by just going the digital way and using now the digital marketing. So that, irrespective of whether you're going to do it physically or you're going to do it virtually, it will still incur a cost. So you must plan for that. Now, we are saying that without effective allocation, you might actually end up overspending in one area, and thus you jeopardize your ability to cover other critical expenses. So it is very, very important that you plan this effectively. Again, when it comes to financial management, another very important aspect is management of cash flows. Now, cash flow means the money in and the money out. Now, cash flow is different from a budget because cash flow just tells us at this specific period in time, which we normally divide in months, I will receive these amounts of money either through cash sales or through collections of data, and these are the expenses that I'm going to incur. So from the cash flow statement, you are able to know how much cash will be coming in during that period, how much cash will be spent, and will you have a deficit or a surplus of cash. So the cash flow statement is very important. And we always say that cash is the lifeblood of a business. If you have no cash, the business will come to a halt, just like an individual, a person. If you have no blood, if you have no oxygen, if your heart is not pumping, then your life comes to an end. Now, we say that if your cash flow management skills are ineffective, you'll actually end up in a situation where you cannot pay employees, you cannot buy stock or inventory, you cannot pay your monthly utility bills. And it is important to note that your business can be making profits, but you are running short of cash. This is because probably maybe you have sold things on credit. So you'll have made sales, but you don't have the cash. So it's important to plan for your cash flows, okay? And by having a cash flow statement, you're able to know which months you'll be having excess cash, which months you run a deficit, and then you plan in advance before that time reaches. Now, another very important aspect that when it comes to management, to financial management, is the issue of learn your expenses and your cost and actually manage the cost. And this is what we are referring to, expense control and cost management. If you have too many costs, and remember we said one of the challenges of startups is very high operational cost. So you need to have skills, you need to devise ways of managing your cost. So we are going to look at, therefore, how can you control these expenses? So one thing you need to note is that there's a direct relationship between profitability and expenses. The lower your expenses, the higher your profits. Again, why do you need to control expenses? Because if you are in charge of your expenses, then there's going to be financial stability, okay? And one way of maybe ensuring that financial stability, you can have a contract that you have signed with your suppliers so that so that you lock the prices. Otherwise, if you have no contracts, you might go to your supplier, they tell you they don't have the goods. This is because you had not agreed that you'll be buying from them. Again, you might go to your suppliers and then they tell you the price has changed. But if you have a contract, they are going to stick to the prices, and if there are going to be changes, there's a way that the contract defines how the prices will be changed. So controlling cost ensures that there is financial stability. If you control your expenses, then you are able to have competitive advantage, meaning you'll be having better prices than your competitors. So meaning you'll be having better selling prices, or if you sell at the same price, your margins will be higher than your competitors. Again, controlling expenses leads to long-term success. Remember, we are starting our business for the long haul. None of us is starting a business with an intention that this one will just die a natural death. No, we all have good, I mean, we are all optimistic and we want our business to go on, and the businesses can even be inherited by our children or our dependents. Again, controlling expenses helps you to mitigate risk. So risk is any unforeseen occurrence. So if you manage your expenses, you can be able to just mitigate some risk. Like for example, now if expenses go up, like maybe during the COVID period when maybe there was containment, whoever was supplying was selling their goods at a higher price because even getting them because of the supply chain that was a bit broken, it was expensive. Now, if you control your expenses, if you have been controlling your expenses, then in such situations, you'll be able to actually afford to buy what is needed. Again, businesses that have a low expense ratio are able to attract investors. As in, they will look at your financials. And one of the things that they will look at is what are your revenue expense ratios, okay? And eventually with the expenses that are controlled, you will always have improved cash flows. So how then can we manage our expenses? Now, business is going to be at least successful. So we have budgeting. We all know what budget is. We have expense tracking. Now, expense tracking is a very important aspect because that means that whatever you spend, you have recorded it. Remember, so many things happen in business. You cannot say, I'll remember. Even in our lives, sometimes when you find that your expenses are too high, and every time you say, I don't know where my money goes, the first thing you'll be told is put down your expenses in paper. So one way of controlling your expenses is to track your expenses. Anything you spend for the business, put it down in writing. And then at the end of the period, you can actually be able to calculate and say, now I can see how my money is spent. Another thing is vendor negotiation. I'd already mentioned that. So go and negotiate. Actually, you lose nothing. If you have a supplier, what is wrong with you? Go and tell him, please give me a better price. So don't just take things as they are, go and negotiate. And once you negotiate, you'll actually, and you keep to the agreed maybe terms, then you'll find that you have some savings. Another very important thing is inventory management. Inventory is stock. How are you managing your stock? Are you buying too many goods? If it is a business where you are selling products, so you might be buying so many goods that can be sold in a period of 3 months. And by doing that, you are tying your finances. So why can't you change your buying mode so that you buy goods that last a month, so that after that month, now you can buy more? Or as a way of managing your inventory, why can't you maybe, if you find that buying in bulk has some profitability, or you get to get discounts, then you can do that, but have a way of managing your inventory. Again, this is because if you have too much stock, you'll pay for the holding cost, you'll pay for insurance, there's chances of the goods getting obsolete, and there's always a chance that employees are going to steal because there's too much of the goods. Again, another way of managing your cost is to have lean operations. Now, outsourcing is a very good concept. In businesses, you can decide, let you do what is your central activity. Do what you are best in, and then other activities, you can get an outsider to offer the services. So that is what we refer to as outsourcing. So especially for the businesses that are big, you can decide that we are not going to be doing cleaning or preparing tea for the employees. Let us get an outsider to do that. For the small businesses like the ones we are doing, you might find that you cannot afford an accountant because they are expensive. So why can't you outsource the accounting function to a firm that offers those services? So that way you'll be able to focus in your main job. You have somebody who is doing your accounts, you have somebody who is doing your tax management, and you're going to be compliant. So that is what is referred to outsourcing. And when you do that, you'll actually find it is cheaper, and the work is done by an expert, and the cost is much cheap comparatively. You'll find it is much cheaper than you having them. And remember, we had talked about the problem of talent acquisition and retention. Again, other ways of managing cost is energy efficiency. We have different ways of saving energy. Maybe you can put down ways you can save on energy, either at home or businesses, and then I'll be checking whether you have those ideas. I talked about digital marketing. It is cheaper so long as you have Wi-Fi, so long as you have somebody who can do just a good design, you can share your flyer. And when you send something on the social media, it goes very far. And it even captures people beyond your boundary. So that is a good way. Employee training, that is important. In fact, we normally say, if you think ignorance is cheap, if you think training is expensive, try ignorance. So you can imagine having employees who don't know what they are supposed to do. And a very important thing is customer feedback. So can I see charts on how you can save energy in your organization? Now, somebody mentioned about having no financial records as one of the causes of business failure. That is very important. Now, if you are running a business, as part of financial management, there are certain financial records that you must have. Now, these financial records are able to tell you whether the business is operating at a profit or a loss. These records are able to tell you what assets and liabilities do you have. In terms of expenses, they will tell you what expenses have you incurred, which ones do you need to incur, which ones have you incurred and you have not yet paid. So it really helps you to know what is happening in the business. So you can see we are saying that these records, they keep track of money coming in and out of the business, and then they provide a very systematic way of recording, classifying, summarizing, and interpreting the financial data. So the key financial statements or financial records you will need is a statement that shows you the profit and the losses. So I'll show you an example of how it looks like, a very basic one, but in very simple terms, it just shows the revenue and the expenses and the difference between the two. And these statements are prepared for a period of time. So if it is for 1 year, if it is for 6 months, you capture all the revenues for that period, all the expenses, and then you know how much you have, the difference between the two, which is the profit or the loss. Again, if you have the statement of financial position or the balance sheet, it shows you the asset, the liabilities, and the difference between the two is now what belongs to the owner, which is now the shareholders' equity. Now, what is the beauty of having these financial records? So as much as you will be the consumer of these records, and what these records will give you beyond you using them is that they will help you to borrow money. If you go to the bank and you are a business that has already started, they'll tell you bring the business records. Again, they will help you to expand the business. If you want to attract investors, investors will tell you bring your financials, we see how you are doing. Again, even you as the owner, you'll say, let me look at my financials. If they are positive, then actually you have all the reason to expand the business. Otherwise, without these records, then you'll be operating like a blind man. You're just doing things for the sake of doing, but you don't know the direction that you are going. Okay? So, and even suppliers, let me add this. Remember we talked about buying goods or selling goods on credit. Now, you can become a creditor, meaning if you are in good credit standing, your suppliers will give you goods on credit. So how will they know that you have the ability to pay? It is these financial records that will guide. So it is very important that you maintain these financial records. And for a startup, you can start maybe for a month so that you know how the business is operating. And why I'm saying a month is because most of these financial records are consolidated at the end of the year. So you don't have to wait until the year is over. You can have it on a weekly basis, on a monthly basis, 3 months, or at least half a year. So the more frequent they are, especially for a startup, the better. So in short, these financial records from what is here, if it is the balance sheet, it will tell you about the assets, the liabilities, and the owner's equity. This is the owner's now claim on the business. So you can see it will tell you if it's a vehicle you have here, it will tell you how much would this be. These are okay, actually these are liabilities. This is what you have not paid for. So you have bought a vehicle on credit. So don't be so happy you have a vehicle and yet you have not paid. You need to know this is what I have and I must pay for it. If you have borrowed money, you capture that. If you have tax expenses not paid, you capture that, and any unpaid bill. So you can see this gives you a very good picture of what the business owes. Assets, it will tell you have a laptop, you have inventory, you have furniture, you have building. So it helps you know what you own. And then finally, the beauty now is this part. It tells you this is what you own. So this, if you started the business maybe with $1,000, if your business is going well, you'll find that now you own 1,000 plus in terms of your contribution in the business, because the business is growing. So this is an example of a financial record that you can have that actually gives you a very good picture of what is happening in your business. So what do you need to prepare these financial records? So I showed you that the slide that has just passed, which was telling us about the assets. So these are examples of assets. I want you to, after this, just look at the business that you intend to start. What assets can it have? So I've listed my assets here. And then here we have what, maybe the other question would be, where would you get the money from? So determine methods to use to make purchases. So for example, you want to make purchases. Are you going to borrow? Are you going to buy, to pay cash? So you just ask yourself these questions, because these are questions on how, that are going to be so alive in the business. So I'm seeing a question from Akelo. So I don't know if there's a question or a statement. Let me just go through it. She's asking, or she has written, when starting a small business which involves workers, which money do you use to start paying them? Do you include their payment in the startup capital or the money that you will get after selling the goods and service? Now, this, when you start, the money that you had as startup, that should cater for their salaries. And this is because you don't know whether there'll be profit or you don't know whether you'll be getting revenue or not. So you cannot tell the workers, I'm employing you, but I'm going to pay you on condition that. So whether you are making profit or not, you have to pay them. So actually, essentially, their initial salaries will come from the capital. And that is why I said, if you find that your expenses are more than your revenues, at the end of the day, your capital is going to go down. But if the business is doing well and the revenues are more than the expenses, your capital is going to grow. Remember, I mentioned that about the capital of the owner's equity. So be ready when you start a business, have some amount set aside to start the business. Some of it will be now for running the business, and it will cater for even money to buy the stock, to sell, or to buy some things that you need to offer the service. Okay, so these are some of the questions that you need when you're just doing your records, so that you can be able to run the business. And here it is important, if you look at the slide, we are saying business owners must be careful to make wise decisions about needs versus wants. Now, remember, this is a startup. You must be able to differentiate what are the priorities and what are the other things that you would have wanted. So for a startup, deal with the priorities. So when it comes to the statement of the balance sheet, which we can call the statement of financial position, this statement captures information about liabilities. This is what you owe outsiders, that is the business. Equity, this is what belongs to you. And then we have this very simple balance sheet equation that says asset plus liability is equals to equity. So if you take what the business now has, you add what the business has borrowed, that should give the equity. So that is the equation. And this is an example of a balance sheet. Maybe after this class, you can go through it, because maybe it might be a bit difficult to understand now, but just take your time and look at it. And you can see it is arranged very well. You can see we have this, the upper part is where we have the assets. You can see this section is the asset. We have the liabilities. And then down here, we have the equity. So this is the part that belongs to the owner. And you can see here we have what the owner contributed, and here we have the retained earnings. The retained earnings these are the profits that have been retained in the business. If the business is making losses, there'll be no retained earnings, but there'll be losses. So instead of adding this amount, you'll be subtracting. So your investment will be going down. So it is important that you try to control your cost, so that at least you're in a profit situation, or even if it is a loss because it's a startup, the loss is controlled. And as the business continues, the loss is converted into profits. Okay. Okay, so income statement, I'd also mentioned this. So maybe I can say in short, this is a statement that tries to balance the revenues and the expenses. And you can see the scale down here. We have revenues on one side, we have expenses on the other side. So if they balance, then it means you are making no profit or loss. If the revenues are more, then you are making profits. If the expenses are more than the revenues, you'll be making losses. So at any one time, ensure that you control your expenses. And on the revenue side, ensure that you are growing your business. Okay, so that is very important. So the basic formula is just revenue minus expenses will be profit or will be losses, depending on which is more. So what we have here again is a typical format of an income statement. You can see we have the revenues up here. Okay, this is what you got by selling or the sales. And then these are the expenses related to the sales. And these are now the operating expenses. And these are the expenses that I mentioned. You need to see how you're going to reduce. And then finally, what you get is the profit or the loss. And you can see tax is an expense. So unless you are a non-profit making organization that you are exempted from tax, all the other business must pay taxes. So always plan for taxes. So as we almost come to wrap up, let's look at what are the necessary tools that will help us to manage our finances. And this is especially for startups. Now, one, we have quite a number of tools that are there. Maybe some of them you've come across them. We have the mobile banking apps. Now, this is a very good app because one, it will help you to track your transactions with the bank. And for a business, I urge you to be paying your suppliers or to be making any payments through the bank. That will give you a very good record. You can now later compare with what you have written in the books. So have the mobile apps. As you can see, we are saying they will help you to have your accounts. They'll help you track your transactions. They'll even help you know how much money has come in, because you'll be telling your customers, we don't receive cash, just make the payment through the bank. And in Kenya, we have, through Safaricom, you can actually have a pay bill and the money goes directly to the bank. Again, you can have Excel spreadsheets. These are very good. The normal Excel sheets, you can actually create formulas within them that will help you now track your expenses. They will help you make budgets. They'll even help you prepare the financial statements, and they will relate all those statements in just one worksheet. Yeah, so that is very important. We also have investment apps. Now, you guys are very lucky because you'll now start operating in a digital age. Unlike some of us where everything was manual. So these investment apps, this one will give you investment opportunities. And from these investment opportunities that are out there, you can be able to save your excess money. Remember when I was talking about the cash flow, I said that if you have excess cash, then can you invest it in the meantime? And it is going to earn you a return. So the investment apps will show you what is there to the options that are there. If you want to put in your money, it will be very easy. And you can also be able to track the growth of your investment. So this is very important. But again, let me warn that when it comes to investments, make sure you filter the information about investment. These days, we have so many investments. And for most of you people in your generation, you like get rich quick things. So anything that offers extraordinary returns, that one you have to be very cautious. We always say when the deal is too good, think twice. So make sure you get the maybe legal investment options. Look at, are they regulated? So if they're regulated in Kenya, it could be by CMA, by the Capital Market Authority, then that one will be okay. And then we also have budgeting apps. We have apps that actually for budget. So you can, after this class, you can actually go at your phone, Google Play, and then try to download budgeting apps, and you'll be able to get them. And in the budgeting app, it means you'll be tracking your expenses, you'll be tracking your revenues. So at the end of the period, you'll just be knowing this is how I spend, this is what I get. And then very, very important, you need to have an app that will help you to know what is happening in the market. Now, even if you are not in the business field, it is important that you are able to know what is happening in the general market, because the general economy actually affects how your business will be doing. This is because we have these macroeconomic factors. So it is good to know what is happening. Again, even by having this financial news, you'll be able to know in your excess cash, should you save it in maybe bonds? Should you save it in shares? Should you save it in a particular asset? So these apps will give you information about what is happening in the market and therefore guide you in the best investment options. So as I wrap up, I just want to wrap up with this quote that says, failing to manage your finances is like sailing a ship without a rudder. You drift wherever the current takes you, and this often ends up on rocky shores. So don't be like that ship that you see up here, probably having no direction, but I can see it has a mast, so definitely it has some direction. But don't be, you can imagine yourself in deep waters and you cannot see the shore, but you are moving in and you don't know where you're going. So if you don't manage your finances, if you don't apply maybe the guidance that I've shared in these slides, you'll actually find that you're in business, but you cannot tell how the business is performing. Your business is not growing. When you compare with your friends who started maybe even after you, they are doing much better. So those are my presentations for today. Thank you so much for listening. And that is me thanking you again for listening. So Joyce, I don't know how much time we have left, so you can guide on this. I'm not seeing anything on Q&A. Joyce, to you.
Not really, but I have a few questions for you. Thank you, Prof, for the wonderful presentation. Again, today I've learned so much, and my take-home message is my focus should never be on money, which is everyone's focus anyway. You invest money to get more money, so we shouldn't focus on the money. So you've mentioned some of the tools that will help us manage startup finances, but a question on the same, I would like to ask, if somebody is starting a business, let's say I'm brand new to this business industry, would you advise me to go get a loan from a bank, considering by the time a business picks up, it will take at least 3 or 4 months before you start realizing your profits? Would you advise me to go to the bank, or how would I go about it?
Okay, now and I'm now speaking as a finance expert. Now, from a finance perspective, we know that every source of money has a cost. So we normally say, look at the cost of that lending, and then now pick the one that has the least cost. So if the option is going to the bank and the bank is offering attractive rates, then go for it. If you can borrow money from friends, definitely they'll give you at a lower rate, then go for that. If you have relatives who are rich and they can lend you actually for free, let me put it that way, then you go for that. So look at the different options that are there, try and get the cheapest. Yeah, because remember, you can imagine borrowing from the bank at 20%, and then your business is not giving you a return of more than 20%. Definitely your business is going to fall. Yeah.
Should I not be worried that maybe, some of the relatives, they lend you money and then they start giving you a threat? If you do not pay me by this time, I will do this, I will do this. Is it not going to be a stress for me as a new business person?
No, okay. For me, I would say it will not really be a stress, especially if you had planned. Because remember, before you start the business, you have done projections, you have done some market scan. So you have a fairly informed, even though not 100% accurate, details about how the business will perform. And again, if you are truthful to them, you tell them, I'm borrowing this money, I have a business, and I'll pay you. If they believe in your vision, if you have been an honest person. Otherwise, if you have been borrowing and never paying, then that's when now you'll have trouble. But do a lot of market scanning. And yesterday we said, when you're trying to project about a new business, don't be over-optimistic. You are better off underestimating the revenues than overestimating. Otherwise, if you overestimate, you'll be in for a rude shock. Yeah. So maybe I can see some questions.
Yes.
Somebody is asking at what point should a startup start investing? Now, a startup should start investing anytime they have excess cash. So if you have excess cash that has not been planned for, invest that money. And why I'm saying this is that don't leave the money in the bank. The returns are very low. If you can invest it in something like treasury bills, or if you go to the money market where you can even, you can close it after a month, then that is a better place because it's going to earn a return. So only invest the excess cash that has no immediate plan. If you have no plan for expansion at that moment, then just invest the money. Or if the money is excess, but it is not allowed, just put it in an investment avenue and it will grow as you maybe now plan to expand the business. Again, there's another that I was answering a question from Mohammed, and thanks for asking that. There's a question from Francis that says, Francis is grateful for the presentation, welcome. And then you say, some supermarkets tend to reject new products from starting businesses or producers because there are some already successful. I mean, yeah, they're already successful existing producers and supplier. What can be done to reduce this monopolization of the market? Yes, now, this is something that is very common. So the most important thing is one, believe in your product and be sure that it has the mark of quality. I mean, in Kenya, it should go to the Kenya Bureau of Standards. And again, be ready to tell the supermarket, let me just bring it and then maybe just bring a few products and then let's see how it goes. So that means that you must have some negotiation skills. You must be patient. And again, if the big supermarkets refuse, try the small supermarkets. If your product is good, the word will definitely go and reach these big supermarkets. Yeah, but don't keep trying. If you go there and they don't accept, don't get discouraged. Just try the smaller ones and then you keep growing. Yes, and then somebody is asking, that's Brian, kindly help validate this statement in business that businesses mostly thrive when you are present as the proprietor. Can I trust people with my business? By the way, that is a very common thing. You find that some businesses, if the owner is not there, the business does not do well. Now, what I would encourage you is that when you have a startup and maybe you'll not be able to be there every day, can you come up with systems that will guide on how the business is performing? Otherwise, if you are the system, meaning if you are not there, the business is not continuing, then you'll be in a lot of trouble. So have some procedures, standard operating procedures. If it is lending money, then if it's selling good on credit, it must be approved, meaning that the person you leave there will not now start selling on credit. Have some ways of ensuring that you can count your stock and know what is there. And also try and have some trusted people in your business. Another thing you can also do is, since these days people are very untrustworthy, you can try to invest in gadgets, maybe cameras that will be able to track. And again, another very important thing is that as much as you are not there, can you make sure you go there frequently? If you are having a busy job, just try to pass at the business every other day so that you make sure that things are running well. And if you can be able to go surprise visits, that will also be better. But always ensure there is reconciliation on a very frequent basis. And I can also add, when it comes to handling cash, try to avoid as much handling of cash. Can you adopt maybe digital applications where customers will be paying directly? But I get this, people are very untrustworthy, and this happens to most people. Yeah, again, I can see, okay, fine. The other one is maybe that is Amadu, probably he or she joined a bit late. So the recording, I'm hoping Joyce will be there. Yeah, so if I look at the question, I think I've answered all the questions. Yeah, so for brand, maybe the last question, can I trust people with my business? You can trust them, but with one eye, I don't know whether I can say with one eye closed or one ear shut. Yeah, so that you don't trust them 100%. Always be, let me call it skeptical. Always have that mind of doubt so that you can be able to know whether you can finally trust them. And then finally, what's your advice on money market funds? Which funds in Kenya are reliable? Okay, now for me, money market funds are a good avenue to invest your money. And I can also say that I personally am an owner of a farm that is an investment farm that is called Lofty Coban. This is a very regulated industry because it gets money from the public. So maybe if you Google me, you can see more about our farm. But I'm saying these farms are all reliable. They are very, very regulated. Every quarter, they have to send reports to the Capital Market Authority, to the central bank. So they are very regulated because this is public money. And for them to be licensed, very stringent, what is it called? Analysis or checkup is done on them so that they ensure that they don't run away with money that belongs to the public. So I hope, Kasindi, you have heard that, and there are very many out there. Joyce, is there any other question?
No, no question, just comments from the scholars. They're really appreciating the good work you've done, and they're appreciating your presentation. They're just sending their heartfelt thank yous to you. And I also would like to appreciate you so much, Professor, for taking your time to take us through this wonderful financial management webinar. We have learned a lot, and surely we will implement this in our businesses, as well as when applying for the WMI seed growth and community development grants. Thank you so much. To our scholars, just a quick reminder, we'll be having our week 5 next week on Tuesday and Thursday, and week 5 will be focusing on HR, staffing needs, and recruitment. Prepare yourself for another week of learning and taking home a lot of knowledge and experience. We will share this presentation, we'll share this YouTube recording, as well as the presentation from Mrs. Kalunda in our respective groups and emails. Watch out and always be on the lookout for new information in the WhatsApp groups. Thank you all so much for attending. Prof, I don't know if you have anything else to say.
Yeah. So thank you so much also, Joyce, for giving me the opportunity to just give my experience to the delegates. And since they'll be having my contact, or you'll be having my contact, in case they need any further consultation, and especially just for the startups, so that, I'll be very much willing and available to help them so that they can have businesses that are successful. So that later when they tell somebody I attended this course, people can say, actually, there's a difference and there's value in attending these training sessions. So that is all that I have to say. I wish them all the best in the remaining sessions that they'll be having, and I'm wishing them successful businesses. Thank you.
Thank you so much, and have a lovely evening and a good day to those who are not in Kenya. Goodbye.
Bye to you all.